I've always been having personal interest in the most advanced technology and how they shift the human societies along the way.
Veronica Wong left behind a decade in big tech to solve one of crypto's biggest problems, trust. She launched SafePal in 2018, right before the market crashed, and kept building. Backed by Binance and Animoca, SafePal now serves 25 million users. We sat down to talk about surviving bear markets, winning user trust, and why crypto UX still has a long way to go.
Each individual needs to manage yourself like a venture capital fund. So the portfolio's opportunity is very uncertain. You need to pull the trigger and try every single year and assume, some doesn't work, maybe majority doesn't work, and very minority will be sort of killer product or killer opportunity in next few years. Hello and welcome to Build It Up, where AI meets crypto, technology meets humanity, and the East meets West. I'm Bill. Before we jump into today's episode, I just want to take a second to say thank you for watching, subscribing, and being part of this growing community. But we noticed that around 30% of our viewers haven't subscribed yet, and nearly 90% haven't left a like or a comment. So if you are watching this right now and enjoying this conversation, do me a favor, hit the subscribe button, drop a comment, and share it with a friend. Now, let's get into it. Yeah, hey, how are you, Veronica? Thank you for joining us today.
Hey Bill, it's been a while since we last catch up. Thank you for having me here. Doing great. Yeah, just survived the token tour for Night Conference week.
Awesome. You are a OG in the industry, especially in the hard wallet business. And I know you have been in this industry since 2018. And could you talk about your transition from traditional Web2 to Web3 and what do you make the pivot?
Yes, before I joined crypto, I've been working in tech for almost a decade. I've always been having personal interest in the most advanced technology and how they shift the human societies along the way. So in 2017, I came across the Bitcoin white paper. It was very interesting because back then, my previous job is to work for a big tech firm for data mining and mass data monetization. So this is how typically the internet monopolies would build their business model upon, which is to earn and which is to mine the consumer data and then to monetize based on the mass data mining. What Bitcoin White Paper has pictured us is a new society that you own not just your assets, but also own your digital footprints, you own your digital identity, and like whatever the economy built upon that should be shared by the common users or consumers, which in this case are us, right? So this is a very interesting thing that not just apply to the traditional financial ecosystem, but also apply to a much wider range of the human society and also the world, how we see it works nowadays. So that was very triggering and I grew interest in this topic, in this subject. And back then, I and the other two co-founders that I work with, the three of us have been talking about this a lot. Back then, Bitcoin was still at a very low price. We started to buy some, which led to my first ownership of the alleged device. So that's how we got connected.
Through which cold wallet you buy or you just...
The earliest one, yeah, the Nano S. Yeah, that's how I personally stepped into crypto. 2017 was a very interesting year because Ethereum ecosystem and also the ICO boom has marked the 2017 as an unforgettable year. Back then, you are seeing new projects popping up every day. There are at least more than hundreds of new projects kind of issuing their white paper and tokens back then on a monthly basis. It's kind of both chaotic and fascinating. But right after that, in early 2018, the market crashed and then it entered a bear market for a couple of years. And that is the timing when we joined the crypto as a builder.
When you get into crypto, I think there were many sectors you can pick, right? But in the end, you ended up with cold wallet as your stage one. So how did you pick the cold wallet as your startup idea in the very beginning?
Yes, for those who joined crypto in recent years, actually back in 2018, there were not much that we can build on. I think back then, the proven model includes issuing a blockchain, like building an L1, and also including building a centralized exchange. back then we already have Binance and a couple of others already on the market who have proven track records of this both business model and user acquisition. And there were wallets, of course, back then. There were a lot of wallets. But problem is most of the wallets are still bleeding. Like none of them has achieved the break-even point. And back then there was no DeFi yet. There was no NFT yet. And then meme has like way until 2023 or 4 that we saw the booming market of meme. So back then, if during the Wild West environments, there was not much that it can build upon. We decided to go for wallets because we saw an interesting data that is during the 2018 bear markets, even though the market has been crashing, we are still seeing rapid growth of the independent Ethereum address on the blockchain, which is a very interesting data that shows that the adoption continues regardless of the crash of the secondary markets. We chose to build for a wallet partially because of regulatory concerns, because the country that I used to stay in is actually very hostile against crypto, and not to mention crypto exchanges. And wallet is something that we find would have a very promising future, while back then it's fully decentralized. So it's actually not under the radar of any global regulatory kind of supervision or attention for that during that time. The second reason is that based on the data that I just mentioned about the independent Ethereum addresses, Rocket still is exponentially growing during that time, even though it's a bear market. The third question regarding like why cold wallet, mainly because we do have the skill sets, because the founding team used to have like years of our own hardware supply chain, our hardware design in combination with very sophisticated software development. And for example, we all used to work for big tech companies previously. So we deeply understand how to build user-friendly interfaces while have a hardcore technology supporting in the backend. So the team skill sets has led us to the point that when it comes to what kind of wallets that we should build, we chose hardware wallet for several reasons. First of all, we are very good at building a good hardware wallet that has a great user experience. And that means this opportunity is for us. Second is back then there were not much hardware wallets to be chosen from. And obviously we have seen a lot of improvements needed in this niche of the products. Because for example, I have Ledger, I have Trezor, I have different kinds of hardware wallets back then available, but they still have a lot of issues regarding usability, regarding cross-chain compatibilities, etc. So we are still seeing a lot of improvements needed in the space. And last but not least, hardware wallet is a category that has a sustainable business model from day one. I do believe this is a very important point for a Web3 team to survive. So all these three reasons combined brought us to a decision that we should start cutting into the markets to position ourselves as a cold wallet provider. And after we have sustained ourselves in the markets, and then we should gradually expand the product lines. And that's how we saw SafePal growing from 2018 until now, almost 7 years, has expanded a lot.
I think when you talk about the cold wallet, from function wise, it is something like you can hold the token, hold the assets for the user, right? And in financial jargon, we call this as a custody. But if we take one step back today, I found that custody is super, super important. But there is something with a lot of social value or customer value, but not as much as commercial value as compared to the other product. I think custody is definitely more important than exchange, right? Like you need to protect your money. Having said that, if today we add up all the valuation of the custody from Ledger, 1 to 2 billion valuation, to Fireblock, as an institutional wallet, etc. But basically, the valuation is not a fraction of the valuation of like Binance or Tether. I guess the fundamental reason is because custody is with a lot of value. But, for the commercial value capture, sounds like the stablecoin and exchange, they capture most of the value. What is your view on that? And I guess, you also pivot kind of like, you start from the custody, but you begin to sort of evolve and to add on some more customer product along the way, right? So would be more than curious to understand your thoughts.
It's a great one because as time goes by, we find it difficult to define who we are, because most of people came to us saying that, oh, is SafePal a cold wallet or is SafePal a hot wallet? Like they try to categorize us into a certain niche to help them to understand what we are actually doing. But what we've been doing is actually can be put into one simple sentence, that is to help every retail crypto investor to manage and grow their crypto assets. safely and in a friendly way. So in
Sorry, so that's your one sentence pitch, right? You want to be the one-click entrance.
Yeah, the one-click entrance for retail crypto users to manage and grow their digital assets. So put under this way, like hardware wallets is a form, it's a means to manage your assets. But we do also offer different types of wallets that you can choose from. So for example, averagely in our mobile app, we can see majority of the users are creating multiple wallets for multiple purpose. Some of them are connected to hardware devices from SafePal. Some of them are just mobile wallets, straight created from the app. Some of them are connected to the browsers that we develop for desktop experiences. So we find it interesting because users find their own way in combining different kinds of wallets that we provide, but for the same goal, that is to safely manage and grow their crypto assets. So that's why as time goes by, we have expanded the product lines from a cold wallet only to nowadays as a comprehensive suite of mobile, of browser, of hardware wallets in combined. And we even have a Telegram mini app on Telegram as well, like to for an easy Telegram in-app building, like kind of wallet experience as well. So that means that it's difficult to define like what kind of product SafePal is. It's more like a one-stop wallet platform for you to secure, for you to grow and manage your crypto assets. And inside the app, we connect you to all kinds of services, all kinds of features, including cross-chain swap, including trading mini app, including earn supermarket. So there are quite a lot of things in the blockchain ecosystem that we bridge the users with and help them to engage with the Web3 ecosystem. So we more like consider SafePal as a financial platform, like that provides different means for you to store your digital assets while offer you abundant choices to explore the decentralized economy.
So right now, can you introduce a little bit about your product line? You mentioned you have hard wallet and hot wallet, etc. And I understand you also have the payment card, right? Could you introduce a little bit about the product line and how big is the SafePal, in a nutshell?
Sure. SafePal right now it's serving about 25 million users globally and still growing very fast. We should see ourselves hitting a new milestone end of the year. The product lines of SafePal includes you can grossly categorize them into two baskets. The first basket is we provide all kinds of non-custodial wallets. The non-custodial wallets includes hardware wallets. We now have 3 types of hardware wallets available from our SafePal.com website. It also includes a mobile wallet. It means that if you don't want to buy any of the devices, you can just go ahead and download the SafePal app and create one for yourself, which is the software wallet or mobile one as we call it. We also have a browser extension. So it's similar to MetaMask, but actually much better because it supports both EVM chains and non-EVM chains. It supports multi-connection to multiple chains on multiple depths. So the user experience is definitely at the next stage. So you can easily find it from Chrome extension store, Firefox, and Edge. And the last type of wallet is a Telegram mini wallet that we built on the most kind of trending Web3 social app, Telegram. So there are 4 types of wallet, all non-custodial for people to choose from, which we put it in the whole basket of wallet products. And the second basket is, I call it more like services, like things that help you grow your crypto assets. So in these baskets, all of these services could be found from the SafePal app. You can consider SafePal app as like a one-click gateway to connect you to all kinds of the services from this basket, including cross-chain swap. It allows you to move money from A chain to B chain, from A token to B token. It allows you to capture market opportunity, especially when there are chances. It also includes a trading mini apps. For this one, we are the earliest wallet supporting the Binance trading mini app in the wallet. That means you can straight connect your Binance accounts with this mini app and stop trading from it, like without even downloading a separate app. So this is very convenient in a sense of moving back and forth between the exchange platforms and also your own non-custodial wallet accounts. We also have an earn supermarket. You can consider it like a DeFi supermarket that we introduce, the most long-standing, the most popular, and also publicly verified by the markets, not the new ones, but the old-standing ones that have the reputation, that have the track records of security of the DeFi protocol in the wallet for you to choose from. We also have the Binance Earn as well. So we do have diversified financial products that you can choose from, very similar like a bank. And last but not least, last year, we have introduced the Swiss banking gateway in the wallet, which is a big milestone for us to develop towards a financial platform kind of positions. So inside the mobile app, users can open up a Swiss bank account, offshore one, that supports USDC top-up along with 4 fiat currencies, including US dollar, offshore CNH, Swiss franc, and euro. So for this one, the account comes with a virtual MasterCard at the moment. Coming next, we are looking into developing physical cards as well. So it allows you to spend crypto from the balance, like millions of merchandise that recognize the master payment network. So this is something that have been massive for the team, and we started to launch this in last March. And so far, we have been seeing pretty satisfactory user growth from this feature, since this is a KYC feature. So it's something that people need to go through the onboarding and the KYC done by the bank. And we are seeing now a very decent amount of registered user for this one already. So as you can hear, combining the two baskets together, for the first basket provides tools for your self-custody. The second basket provides means for your asset management on a personal level. So that's how we position ourselves as more like a financial platform other than just a wallet.
Gotcha. So it sounds like you start as a wallet, but now in a sense, you are on the same table to compete with other exchange.
I would assume it's different species, to be honest, because we are targeting at those less active traders. Because if you are an active trader, then of course you will go for exchanges because the liquidity, the bandwidth, that they offer the best trading experiences, to be honest. And we target at the normies who are holding crypto, but not as like DeFi experts or trading experts, but those people who are interested in crypto and would like to find their own way pursuing financial freedom in the world of blockchain, in the world of cryptocurrencies. So I see there are slight differences of user profiles.
So more for wealth management instead of the active trading, right?
Yes.
Makes sense. But you're serving 25 million users already. That's very impressive. I think that that number outperform 90% of the incumbent crypto exchange already.
Thank you. I'm not quite sure. I'm not an expert in exchange landscape, but yeah, we're still surviving here. And luckily that we have reached the break-even point the second year where we founded the company. So right now, yes, the team has been profitable. The team has been quite healthy. We have a quite healthy financial model. So yeah, I believe we're gonna stay on the table for long enough.
Yeah. Regarding the profit driven from the traditional internet mindset, there are some kind of product which you leverage to get more traffic and user, and there are some kind of product just for the profit. Do you see the payment card is a product with both traffic acquisition and the profitability, or it's more like a traffic? How do you position the payment card into your strategy pillars?
At the current stage, since we are only hitting 19 months since we launched these products, everything is experimental. Means that we are newcomer learning the process of introducing such kind of services to our users, and we are observing the data to understand their behavior better. So far, one thing that we discover is that it's great for user retention. It's great to retain people. It's great for the assets stored, the total value stored in the wallet. Like people tend to be more willing to put a large sum of money in the wallets, not just in the hardware wallets, but as time goes by, grossly on the SafePal platform, they are more willing. So we did see increase of the total wallet value stored in the SafePal accounts.
Because they get the stickiness to use your payment
Exactly,
card
yes.
every day. Then they get
Yes.
comfortable to deposit more money. Interesting.
Exactly, yes.
Okay. And you mentioned it has been 19 months after you launched the payment card.
Yes.
So 1.5 years.
1.5 years since last March.
Okay. I have a question regarding the stablecoin payment card. Before, I tried a lot of payment card, but in the end, I didn't use them on daily basis because let's say I live in Dubai and I have Dubai local currency credit card or debit card. And if I use a stablecoin card, usually, it has some kind of foreign exchange loss. And it's not that convenient economically. And I heard some saying the payment card, a stablecoin card, usually is for a digital nomad who doesn't have that many local card and who want to travel globally. B is for the bank population. Basically, this card become their alternative. What is your take on this?
At the current stage, yes, I believe that these are the early adopters of this kind of so-called crypto payment cards. And as we observe the community and the discussions in those group chats, indeed, the first group of people that we saw adopting these payment cards would be digital nomads or the crypto people who move a lot around different places, KOLs who are in strong demands of converting into local currencies, etc. So we are seeing people like this, the first adopt early mover. We believe time could change because the next wave of potential clients for these services would be those curious people who want to get a taste of crypto. We now are receiving user suggestions saying that what if I deposit the balance in the bank accounts? Can it yield? Can I capture the DeFi yielding? So this is an interesting one because as time goes by, people would notice that there are stablecoin yielding opportunities in this world that would outperform the traditional financial products in a way. So we have interest from these people. They open up the bank accounts, they on-ramp to crypto, they try to capture the opportunity in the DeFi world. Of course, there are already existing mature stablecoin yielding products that it's kind of 8 to 10%, which is already very decent compared to
8 to 10%, you're talking about some yield farming or like delta neutral, etc.
yeah, delta neutral, more delta neutral. The risk is relatively controllable, and more controlled. But compared to traditional financial bank yielding, it's quite satisfactory. We have seen the keen interest from people in traditional financial world kind of gradually stepping into this. So this is also something that we have seen and could be the next wave of people who adopt this crypto payment card. And talking about friction, indeed, I think this is a big pain point. Right now, the Swiss banking gateway that we provide, that we offered, supports US dollar. So great news is that if you're using US dollar, then there's no friction cost because you're converting USDC into a US dollar. So that means there's no friction cost among it's 1v1. But when you convert it into other currencies, indeed, the bank might charge us the friction costs.
Yes, yeah. Yeah, but I think if basically the user can deposit their current account into a 8 to 10% on-chain money market fund, that would be awesome and can offset a lot of the other inconvenience, right?
Indeed. So that is something, the next step of product that we are trying to build on top. Now we have the banking gateway as a compliance-friendly on and off-ramp gateway for users. The next step would be like how we help them to maximize and capture the opportunity in DeFi. So this is actually in our next step of product roadmap.
Okay, so it sounds like, in regarding the wealth management and the payment, pretty much you focus on the digital nomad and DGN and high net worth in the sense. So your card is not targeting to the unbanked population yet. I know there's some kind of payment card entrepreneur who are dedicated to focus on this, but this is not your priority as of now.
Not because we are not interested in it, but because from a compliance perspective, there are eligible countries that we can serve at the current stage, according to the bank. So that means there are only about 70-ish countries and regions that we can serve a food-based service towards at the moment. So we will still have to comply with the bank policy regarding who we should serve, we could serve and who cannot. So this is a matter of time, like regarding gradually opening up to more countries and regions.
And could you talk about the token? I know you launched a token before, and right now, how you engage this token to your ecosystem, and how do you see a wallet company, the strategy fit into a token play as well?
SafePal launched its own token called SFP in 2021. In February 8th, it was listed on Binance as the IO project back then. There are 500 million SFP tokens on the market. Till this moment, 4 years passed already, so they are all fully unlocked. So circulating supply 100%. SFP token was introduced as a utility token for the SafePal platform. That means typically the SFP holders are also the SafePal product users because they find it useful. Right now, we build the SFP utilities in the wallet for different kinds of experiences. We basically embed it into all possible ways, including discounted swap and whitelisted access to some certain exclusive benefits and profits, and also gasless experience using SFP. If you have SFP token in your wallet, then gas will not be a problem since we support Citizen O2. We can kind of deduct it from the SFP tokens that you have and pay for the gas on chain. You don't need to necessarily understand what's going on behind. We also have a yielding boost. If you are an SFP stakeholder, then if you go for the DeFi staking and yielding, you can have a high APY. So basically everything about the SFP tokenomics is binded with the product usage and the product utility. This is the earliest reason why we introduced the SFP token, which is we want to find a way to incentivize those who actually use and care the products, who have been loyal to the SafePal platform, and they get incentivized through the tokenomics. So this is the primary goal, and even till now, we are still executing this strategy. So moving on next, for the banking services, we also have SFP tokenomics combined. Like if you are holding SFP token in the wallet, you can automatically upgrade your banking accounts into a higher tier and enjoy a lower fee for these accounts, even though currently we wouldn't charge anything yet. But when there's a fee of applicable, then you will find this pretty useful for upgrading a card and enjoying a lower fee by staking some SFP tokens. So we built SFP tokens as part of the core engine of driving user loyalty or driving user retention. So that is how we gradually build it up.
Regarding the tokenomics, I see the industry in the very beginning, most of the token for the founders, they try to, leverage this as a rewards token or membership token in a sense. And now I saw there is even another movement like Hype, Liquid, or ENA, ECNA, etc. They want to either through buyback. Buyback is an alternative of the dividend payout in a sense, right? Or like, to direct, staking or dividend payout. How do you see the movement? Because, from your explanation, I understand your token is a phenomenal rewards and membership token already, right? And
Yeah.
how do you see the next stage of the evolvement?
I think it depends on what kind of business that you are building. I think for exchanges who are much more like maybe 10x, even much higher profitable compared to a wallet like us, they would have the financial supports to enable buyback, to enable token kind of secondary market movement. But it depends on different teams. Like for teams like us who are not really as profitable as exchanges, to be honest, they are at the top of the pyramids. We find it a challenging mathematical solving problem if we try to invest the revenue or invest the team's kind of margin into buying back the tokens. Is really not moving the markets too much. Like we have done the math and calculation already.
The budget and number doesn't work.
Doesn't work and doesn't make any like big changes, to be honest. Like we're not really that rich to be honest as an exchange. So there's nothing to hide about from that. And obviously exchanges are capturing about a majority, like more than half, followed by market maker, followed by others. So we don't think this kind of calculation makes sense to us. So we decided that we double down the road of rewards and membership kind of system.
Regarding the crypto user engagement, most of the users, they are seeking the yields in a sense, right? Because the whole crypto, it's 99% fintech paradigm upgrades and innovation. And do you feel it is very intensive to generate the alpha every single period, because the alpha will disappear or be pricing, and then you have to find another alpha to your wealth management clients? How do you continuously provide the alpha to your investor?
We are way more conservative than you thought. Instead of chasing alpha, we try to find a safe enough option for our users because we definitely don't want to see them lose money. The problem of the secondary market is that it's highly volatile. Opportunities come and go in the matter of blink. So it would become very high risk if we recommend some new trending, popular, so-called viral token or alpha opportunities to our customers. So we try to be very cautious on that one. So if you go through the Earn Center that we have in the app, most of the protocols are like L1 token, like kind of staking, proof of stake kind of protocols, and also like ETH staking. So these are kind of a low risk and more controllable reputational kind of protocols that we find it comfortable to recommend to our users. Either some are coming from our third-party partners like Killing, so we have protocols integrated from them, and they would offer that kind of services. But we do make sure that the customers understand that, yeah, but they are buying third-party products. So we try to be very cautious because we don't want to ruin the brand of security. SafePal has been started and position ourselves as a security brand. And we try to make it very careful. And especially this is a regulated market. If we put it in the context of traditional finance, you need to hold a license to recommend such kind of products to your clients. And you have to do due diligence on your clients and make sure that they understand the risk. While in crypto, there's no such kind of regulation and requirements at the moment. So we still try to play it in a safe way and hold up to the standards that we are seeing in traditional finance and try not to be too aggressive in a way. But in a wallet, we kind of split them into two sections. The first section would be earn. So these people, we consider the users who are interested in these products would tend to be low risk appetite. They are looking for a decent amount of yielding, but not too greedy, not too aggressive. Maybe 5 to 10 would be a decent enough compared to traditional banking. Like anything below 20 would also be nice. So we consider the user profile who are interested in this section would be more low risk appetite kind of clients that are also holding a large amount of assets. But on the other hand, for those who want to pursue alpha opportunities, we do have a Quest Hub program in the wallets that are opening up all of these pre-listing tokens. Some are post-listing tokens, kind of drop programs. But for these ones, we try to filter. Like a lot of these Web3 projects came to us asking for user growth and asking for campaign that help them to grow. We try to do as much of the due diligence as possible to understand their backgrounds. Basically, the team has to go through the as complicated as possible kind of diligence process to understand like what you're offering to the users and what is those incentives that are dropping. And users will have to understand and read through those documents as well. So we try to make sure that they understand this is a risk involved. And of course, we are opening up these opportunities for users, but we make sure that they understand the roles. Because things happened like 4 or 5 years ago where we were less experienced, where we introduced these kind of airdrop programs, like people, they lost money out of investment and they tend to blame it on us. So as time goes by, we try to be more mature. We try to understand the market that it takes time to grow. Like there's no superstar that it was born in the first day and then capture the whole market and then it can continue like that. There will be ups and downs of these products. There will be ups and downs of these Web3 projects in the back building it. So we believe that it takes time for a product to mature. So we can split them into two baskets. The first one is the earn, which is the lower risk kind of appetite products, while the higher risk appetites alpha hunting would be in the Quest Hub. That is much wider open, but we also make sure that we have the due diligence, like at least a basic sense of due diligence to understand the product. We go through the testing to make sure that it's not really taking my money. We check the audit reports, we check the investor backgrounds, etc., that we do as many of public kind of research as we could to understand it and then put it into the pool and then it's on. There people can come and then they can finish the press task and then they can take claim of the token, which we don't guarantee the value. So we put them into two categories and make sure that each one of it make it explicit to users that there are risks involved.
Okay, so basically a prudent yield strategy. The contact conditions should always be, secure and prudent, conservative in a sense. That is your operation philosophy. And come back to the security, I want to also get your idea regarding a Cambodia criminal scammer got frozen by the US government. And does that impact your community? Because most of the normie, they cannot understand like why all of a sudden the US government can get the private key.
Indeed, we have got in the last 7 days, we have got a lot of customer tickets. Like we have a customer support team supporting any kind of questions related to products. We recently received a lot of questions from the users asking, how come I cannot move my USDT, my 20 USDT in the SafePal wallet? Like it keeps failing. I mean, from the wallet, you can see.
Oh, really? Why?
Yeah, you just keep it see failing because this associated address with the illicit activity has been blacklisted by Tether official on the Tron network. So that means you can go ahead and broadcast the transaction. They will charge you a fee, but at the end of the day, the transaction doesn't go through and you keep seeing failing transaction.
Sorry, if I can clarify. So some of your user, they as a sender, their own address has a problem or the receiver address has a problem?
Own address, I believe. Since we don't do
okay.
KYC on users, we have no idea who these people are because like blockchain transfers are widespread. So that means even though you personal is not an illegal, not a bad actor, but your upstream transaction flow could be associated with the illicit activity, which leads to your address being blacklisted by Tether official. So we have seen things like this, like normal people, like we can understand that this is maybe just a normal people asking, how come I see repetitive failed TRC20 USDT transaction in the wallet? What is the problem behind it? And as we track down, we found this address on the blacklist, like from the Tron Scan Explorer. So obviously this address has been tagged by Tether and they cannot move the USDT from the wallet balance.
Only USDT.
Only USDT. Only the TRC20 USDT on the Tron network at the moment, yes. Since we are seeing big issue on Tron, not on the other network, I assume that is the reason why Tether is kind of freezing the funds on Tron network. Only the USDT one. Indeed, this is a very confusing situation for these people, because some of them are sophisticated users, as you can tell, because they did cheat tests and they said, I send other funds and other tokens don't have such kind of issue, but only the TRC20 USDT. And how come? And later on, we told them the reason, and it's both shocking and also confusing because they don't know what to do to kind of release their funds. They would probably have to talk to the Tether official to appeal this kind of fund frozen action. Yeah, so this is indeed kind of struck us as a moment that a third party, a independent institutional company can actually control the funds on the network in such a way. To understand it, USDT is issued by Tether. So from a regulatory perspective, it's more than reasonable, and we can more than normally understand like why they have to take this kind of action, because this is also to protect the victims from the illicit activity. So it's we are going to see this kind of situation coming back and back again. This is actually the convergence. We are experiencing the age of convergence between Web 2.0 and Web 3.0. Web 2.0 is fully regulated. Web 3.0 is like Wild West. And at the end of the day, we're probably at 2.6 or 2.4 something. So we are right now at a transitional stage to see both worlds colliding each other and then forming new rules.
So then what's the advice to us as a normal user, like how we can, I guess, most of our audience, they are not criminal, but ask for how to sort of sneak out, right? They are asking on behalf of like, I'm a normal person, but I don't want my account to be contaminated. So on that front, what's the advice? Like, shall we just try to use USDC and not the Tron anymore? Like, what would be the take here?
First of all, I would recommend to put your funds in different accounts for different purposes. Like if there are some large sum of funds that you would like to store for long term, then definitely don't mingle it with the DeFi assets that you hold, which you have more active activities on chain for. So I do believe that if you have long-term storage purpose of the funds, then you just put it separately in the hardware wallet or in a separate account. And then for those who are actively engaged with third-party activities like DeFi mining, yielding, like trading strategies, you would have counterparty risk whatsoever. Like you don't know at the end of the day what on earth happened when you engage with a third-party transfer, and then all of a sudden there are something fishy going on. So for this one, I would recommend that you separate these wallets for different purposes. Some of these might be low risk, because like for DeFi mining and yielding, I believe this is like a more reasonable risks compared to the case that we talk about, like your money got frozen. And some of them would be for a wider risk range. For example, go for cross-chain slot for Tron assets, USDT, because right now it's becoming the heating targets for regulators already on Tron network. And we know that like there are also other cases associated with this, like with the Tron network. So we do, to be very honest, from our personal observation, when you have activity on Tron, the odds will be higher, like that you could be associated on the upper stream of the transaction flow with illicit activity. So we would suggest to put extra caution when you are engaging with the Tron ecosystem, especially the stablecoin wise, because like scammers and bad actors, they love to use the stablecoins as well. So yeah, these are some of the suggestions I might give to my friends.
Okay, so basically segregation of the account and also be more cautious if you want to use Tron as a layer one.
Yes, and always be cautious about the party kind of transaction. If you don't know who the heck that person is, you don't know who you are engaging with, better to be safe.
And also, I want to ask your insights on the private key. I think yesterday or the day before, the Cambodia, arguably is a criminal organization, their Bitcoin, got frozen by US government, right? Does that one, trigger more concern in your community as well?
Not so much, because USDT on Tron network is the only one impacted.
But not Bitcoin private key management. That is okay.
Yeah, that is okay. That is okay. Not much concern surrounding that.
Okay, cool. Yeah, I think that's pretty much for today. And my last question would be, what's your advice to the younger generation if they are early 20 and want to graduate, pick an industry, and to build up their career?
I think we are living in a world of uncertainty. We are living in a world of like, we don't know what tomorrow would happen, especially right now the US government and the Chinese government are kind of fighting over, and we are seeing the chaos in Europe as well. Like everything seems different and you cannot really predict what happens tomorrow. So for example, my generation, like the 80s kind of generation, has experienced the most rapid growth of my country, like for...
Yeah, that's long only age.
Yes, but now we have entered a volatile age that is kind of very bumpy and a lot of uncertainty, a lot of ambiguity that you cannot really predict. Like you have to make moves according to the real situation. So I think like it's important for us to embrace the uncertainty and to make wise choices. I think that is the biggest one, the reminder that I would give to the younger generation. The second one would be like always keep trying. I think like for younger generation, we don't know, like parents might tell us, or the elder generation might tell us that, for example, back in my days, my family considered working for the government is the best job ever. And working in the bank is the best job ever. But nowadays, they will see it differently for this one, regarding which way to go. So I think for youngsters, it's very important that you keep trying different ways and keep trying different paths. And the world would bump it back, and then you can see yourself in regarding which of the things that you're good at, which are the things that you like, and which are the things that you're passionate about. I think it's only if you living and trying that you find the way that fits for you. So I think don't let anybody who tell you what is right or wrong. Like just keep trying and then find the answer by yourself, which is quite important, especially in the age of uncertainty.
That's very well said. And I strongly believe right now, each individual needs to manage yourself like a venture capital fund. So the portfolio's opportunity is very uncertain. There's no sort of a real estate or stock ETF, which you can just do a long only and sleep well on that. And basically, like, you have to assume you need to pull the trigger and try every single year and assume some doesn't work, maybe majority doesn't work, and very minority will be your killer product or killer opportunity in next few years.
Yes, exactly.
Okay, cool. Yeah, thank you, Veronica, and thank you for the inspiring sharing, and I really appreciate it.
Thank you. Appreciate your time and thank you for the opportunity.
Have a good day. Thanks for watching Build It Up. If you enjoyed this episode, don't forget to hit that subscribe button, drop a comment, and share it with a friend. And if you like to catch more stories and insights, you can follow me on LinkedIn, X, and of course, right here on YouTube. I'm Bill. See you in the next one.